I really love this photo. I think this photo really summarizes how much fun we had in 2022. And going to 2023, we're going to carry on the laughter, the opportunities, really putting black women in tech on the limelight, talking technology, and also creating art. And I think this is what we are all about. So if you're new to GTA Black Women in Tech, very brief introduction. Our vision is to normalize Black female excellence. I started this journey not knowing what's going to happen, and now we are open a chapter in Dublin, in Ireland. We opened a chapter in Paris last month in France, and if things go as planned, we're also going to open a chapter in Berlin this year. But yes, so we're here. So we're a global community. GTA Black Women in Tech is part of a bigger network called GTA Global Advocates. You also have Tech London Advocates. So if you like our network, check out what the other chapters in other groups are doing as well. But we'll talk about that in a minute. So yes, so I like to look at the numbers, and these numbers actually are incorrect because we're now 12,000 people on amount of followers on LinkedIn, and obviously these numbers as well have grown on other social media platforms. So if you are looking for us, you can find us on LinkedIn, you can find us on TikTok now as well, you can find us on Instagram and so much more. Really count anyway. We on the involvement of our of our members, of you, to spread the word. So if you think that you love what we're doing, make sure that you tell to as many people as possible, which is super important. And within our network, you can really connect women at different stages of their career. If you've been to our in-person event, you will see that the energy in the room is always buzzing, and also people will attend, enjoy, and have a great time. So really, just make sure you take advantage of our Slack network, and to really just tap into those elements of connecting and sharing opportunities that you have. We've created this for you, so really utilize that to brag about yourself as well. Nothing stopping you. As I said, like, we're bigger networks, so part of a bigger group of individuals. So if you work in food tech, if you work in IoT, join those networks as well. Don't just stay within GTA Black Women in Tech, because obviously I want to make sure that they understand and talk about normalizing Black female excellence, which means make sure that we see us in every single possible platforms. Yeah, super important. Essentially, what we do, as I said, like, we do monthly networking events. We're gonna really go back into full motion more towards June. I think May will be a bit quiet because we want to be able to prepare ourselves for what's happening for the the third quarter, and the last quarter. We obviously have network in Ireland, but also in France. So if you're looking for a day trip, we're going to bring some physical event in Dublin and physical event in Paris. Make the best of that. You'd be very surprised. I think people are still very surprised by the quality and the level of our Black women across the world, which is amazing. And we also looking at Africa and America, but one step at a time. I think one thing that's really good as well is about changing content creators that you get behind the art that we create, which address, for example, colorism and dark skin discrimination, but also, having conversation that people are not necessarily being asked to speak. So I love, for example, the conversation, with Tara from Google, and talking about her journey, and she's done so well. Yes, and part of our network, such as our Action Masterclass, we now make an effort to bring super great leaders to share, to spend 1 hour with you and really giving you an insight to really just take the right decision. And today we're blessed to have Chenelle with us. We're going to talk about fund, because it's interesting. As we know, the Black woman is the one who is able to secure the less amount of money. So she's going to share us some tips so this can no longer be a barrier for us. If you say, Flavilla, I want to get more involved, we have a brand ambassador program. Check it out on our website. We have a great brand ambassador package you can be part of no matter where you are. And obviously, if you know somebody who want to transition into tech career guide is there for you, and we keep updating it. Talk about art collection, you can check this out on our website. As you know already, our publications are now archived at the British Library, publication number 1, publication number 2, which is amazing. And now we're also working on publication number 3. The theme for this year is Lost History. I would like to also, if you haven't checked out a little content that we created, it's about telling the stories of Black women across the world, not necessarily in technology pre-1950, who have made an impact. We'll have within the book the stories of Black women in tech, but part of the bigger idea is actually a beautiful virtual map that would tell us to help you discover stories of Black women pre-1950s and how they impacted. We usually have distributed, for the last two volumes, we've distributed our books into schools, but now we're also going to distribute our books into libraries. I don't know for you, but when I grew up, in my small apartment, I didn't have the luxury of having my own bedroom, so I had to share with my brothers and sisters. And when it comes to peace and quiet, the library was my best place. And what a great, opportunity to discover stories of Black women in tech by having our books also distributed into libraries across the UK and Ireland. And soon you'll be able to pre-order, but it's not open. So make sure that you save the date, 26th of October 2023, is when our festival is taking place. And if you were there last year, you want to be back, come back again. All right. And obviously this is what's different this year. So we're working on creating a virtual map where you'll be able to discover stories of Black women, not necessarily in technology, but Black women across the world who have made a fantastic impact. Again, if your company is looking to sponsor a great project, please share the word. It's very important because we can only make all these activities free for you. We count on companies who really are committed to diversity and committed to our vision to help us get there. So please spread the word. I think it's super important. And there's some fantastic, if among our brand members, there's some fantastic opportunities right now with different brands. Barclays is recruiting, but also PlayStation is recruiting. So please do check out our website. And, no matter where you are, you'll find opportunities, whatever advanced, graduate, apprentice, transition. They have some good opportunities and they're looking for you. All right, so this is the wrong slide. You know that one. I'm stopping right there and I'm going to give the floor. And again, Stephanie, I'm going to give the floor to the fantastic and super talented and again, very grateful for knowing this person. And that's it for me. So thank you so much. I say Bernadine, Voice in Shadow, yes, was brilliant last year. Indeed, if you know you're there, make sure you share the word. Share the word about this. Thank you so much, Kat. 20th of October, save it in your diary. And yes, so thank you so much. I guess, Mary, feel free to take me off the floor. Atalanta, it's enough for me, but I can't hear you, Chenelle.
Okay,
Just
can
make
you
sure.
hear me now?
All right.
Okay, amazing. Right. There's always a technical glitch with me, so apologies. But I am so excited to be here and to be speaking to this amazing community. Flavilla, thank you so much for inviting me to speak to these amazing women. I remember coming to the conference in the summer and it was phenomenal. Like the energy in the room, all of the amazing Black women that had achieved so much, that were working on like their side businesses or businesses that were thriving. It was just, for me, so inspirational. I remember walking out of that conference and just feeling so full. Black women is something that I am so passionate about, and the advancement and Black women excelling is something that, yeah, it runs deep to my core. So I am really pleased to be invited to this community to speak to you all. And we know I'm not going to get into the numbers, but the amount of venture capital funding that goes to Black founders, specifically Black female founders, you probably can't even quantify it, something like 0.02% or something, which is insane, right? And then, so we have a lot of work to do. We do. And so today I'm going to be delivering a masterclass on how to secure investment. I'll put some slides up in this in a second, but I just wanted to give you an overview about, about what I'll be when I'm speaking to either women who are, or just anyone that is running their business or thinking about starting a business. I like to go back to basics because I think in today's world, everyone automatically assumes that, I'll start a business and I'll go and raise some money from a venture capital fund. And that's not necessarily the way to go about it. and it's very much linked to the type of business that you are trying to build and what your goals are. So I'll spend some time talking through the differences, because I think there's kind of an educational piece, and I apologize if I'm teaching, you wonderful women how to suck eggs, but you just never really know who the audience is going to be. And I always like to start with that positioning piece, because I think once you have all of the information, then you can make the decision about whether you want to receive funding, and if you are going to receive funding, what options are available to you, so you don't get frustrated. I meet so many sisters, so many Black women that are like, Chenelle, why can't I raise money? And I'm like, okay, tell me a little bit about your money, about your business, sorry. And it turns out that they aren't, the business that they are building isn't one that's astute or aligned with one that a venture capital fund will invest in. So I'm going to take some time to kind of explain what that looks like today. Okay, so I'm going to share my slides. And to be honest, my style is I like when it's quite interactive. So as I am talking, please, comment, post questions in the chat. I would really like to, I want you to feel like you're involved. And I also don't like listening to my voice consistently for a long period of time. So please do drop questions in the chat, so I'm more than happy to stop and address your comments or answer your questions as we go through. So let me put some slides up. Right. Okay. Let me just put it into presenter mode. Okay. So today's masterclass session, as I mentioned, is focused on securing investment for your business. Session is delivered by me, Chenelle Ansah. I wear a couple of hats, but today I guess I'll lead the conversation with my hat as an investor, based here in the UK. So just a little bit about myself, just brief overview about myself. So, because I think it's really, really important to kind of, share my story and how I came to do what I am doing today. So, originally from Ghana, but kind of raised here in the UK. Grew up in East London. Didn't go to the best schools, but somehow have managed to end up where I am today. And I always say that because sometimes we are told that we cannot do certain things based on our backgrounds and how we were raised, right? And our start in life. But um, I'm here to dispel that, right? And I'm sure a number of you have also dispelled that view as well, because I'm sure you're doing phenomenal things. So grew up in East London, went off to university, studied business and Brunel University, and then became an investment banker. And it was really interesting because I thought, that's what you're supposed to do. That's a great career. But I actually really realized very quickly that, and then I switched into management consulting, and I loved that a bit more, for a number of reasons, mainly because I could problem solve and see outputs of my work. And then stayed as a management consultant, specifically working in digital transformation and building and selling tech solutions, and doing a lot of change programs in the financial services industry for a number of years. And then it got to a certain point where I said, oh, I can do this myself, right? And I opened my consultancy, Nell Consulting, in 2017, and we specialized in helping digital banks, so the likes of Zopa and Tandem Bank, who are clients of mine, to build their business, get their banking license, and launch to market. And yeah, this is what it's a very specialist and niche thing to do, but yeah, I'm probably one of few Black women in the UK that kind of has this skill set. So, running Nell Consulting for a couple of years, and then, a question I get asked is, how did you move into investing? And honestly, as much as I really love my clients, I looked around looked around me when I was sitting in these board meetings with these founders and board members in the exec team. And even though I was a consultant, I was still the only person that looked like me. Quite often, I was the only woman in the room. I was definitely always the only Black person in the room. And then I said, where are we? Why are we not in these spaces? And quite frankly, I wanted to spend some time working with us. So I set some intentions, right? I believe in intentions a lot. And I set some intentions and I said, I want to take all of my experience and work with us. And let's see what will happen. And then a few months later, one of the guys at Cornerstone Partners reached out and said, hey, Chenelle, love what you've been doing, and we have an opening. Would you like to join us as a partner? And I said, okay, sure. Love what you guys are doing, and for those of you who don't know, Cornerstone Partners was the UK's first Black investment group focused on investing in early stage, that's specifically pre-seed and seed stage businesses here in the UK. So I joined Cornerstone. So I was like, right, love the mission, it's for us, and I've got a bunch of like operational experience and I can help, and I can also learn the investment piece. And once I joined Cornerstone, I realized actually there's a significant gap, right? And there's a lot that can be done. And then I really understood the importance of my role in being a capital allocator and trying to create space, right, and access to overlooked groups, right, people from marginalized communities, and also like founders just building businesses that really matter and that will drive positive change. And so, you may have seen me involved with a number of different organizations. I have a few up on there, but, I partner and work with these organizations to create awareness and lend expertise around early stage investing because it's so, so, so important. So that's me in a nutshell. I say to every group that I speak to and engage with, our interaction doesn't just stop at in a masterclass or in a talk or in a session. You'll have my information. Please feel free to reach out to me. More than happy to continue the conversation. If you ever need some advice, just drop me a note on LinkedIn, and I do respond. Typically, it depends, but I will come back to you definitely within 2 weeks tops. But yeah, don't hesitate to reach out. So let's get into it. So, as I mentioned, today I'm going to give you an overview of the different funding options available at each stage of your startup or your business journey. And then, you can use that information and determine, which funding source best suits your business. And then, as I mentioned, I'm in the world of venture capital. And so I know what investors in the venture capital space look for. So I will be very transparent and give you some of these insights. And then also, I just kind of I will use a few minutes, not spend too much time, but just to give you a bit of an overview around, a cash flow forecast, which I think is a phenomenal tool to help you not only just help you get ready to raise money, but also it helps you to understand your cash flow position, understand your finances, understand your business model, and then figure out if and when you need to bring in money for your business. So I always talk about this. So when we talk about raising capital, as I mentioned, there are a number of things to think about. There's a number of different funding options, but I see a lot that people say, oh, okay, I've got this business idea, run, I'm going to go and talk to all these investors and ask for money. And that's not necessarily the best way to go about it. That's not necessarily the best way to go about it. I think, okay, Kat says go back to the last slide. Okay, so I'm on the last slide. And it's not necessarily the best way to go about it. I think you need to sit down and say, okay, what business is it that I am building, right? What's my goals and aspirations? Like, where am I trying to get to in 5 to 10 years? And then once you really kind of understand that, you will understand whether you are building a small business or building a startup. And for me, I think that I'll explain. So, if you are building a small business, um, and it kind of, it's illustrated on, I've used a truck here because growth for a small business is quite steady. You are not looking to get to £1 billion valuation, $1 billion valuation in about in under 7 years. You want steady growth. You maybe want to focus on a specific location or a specific region, and maybe, get into a point where your business is worth a couple of 100 million is great. And now these are not small numbers, I know, but I throw this out there because I want you to understand how venture capitalists think about startups versus small businesses. Now, if you are building a startup business, your aspiration is for you to get to $1 billion valuation as quickly as possible. That means exponential growth, and quite often, if you are a founder or in a founding team, that means this business is going to take over your whole life, your family, and everything, because you need to dedicate everything in growing it so quickly so that you can hit dollars within sort of a 5 to 7 year period. And that's fine. And if you're like, yes, this is what I'm building, that is absolutely excellent. But if you say, hey, actually, if I want to get to a couple of million, or I want to get to a couple of 100,000, or I want to get to, you know, half a billion, fine. And, I want to take my time to grow this business, at a steady rate. Maybe I want to focus on a particular section of the market, or I only want to be UK focused, or only focused on London. Then okay, maybe for me, I'm a small business. And, I also just, I want to throw in a stat of all of the SMEs in the UK, actually, which contribute significantly to the development of the UK ecosystem, and only 1% of SMEs get money from venture capitals, right? So when you think about it, it doesn't mean that if you don't get money from a venture capital fund, you're unsuccessful. No, because if you think about it, the backbone of the UK economy is built off small to medium enterprises. And, that contributes towards job creation, money flowing back into the system, and they have a fundamental role to play. But of all of that, only 1% gets venture capital funded. So that I say that to say there's 99% of, SMEs in the UK that are doing phenomenal things, right? And that are making a lot of money and have a positive contribution, that haven't gone down the venture capital route because they've said, hey, I'm going to be a small business owner, right? Or small to medium enterprise business owner. And there's other ways that I can fund my business and I can grow in a way that's different to this. I'm going to say it's crazy. On the venture capital side of things, it's crazy on this side of town. Like, we want you to do a lot. And that's fine. Some of us are wired that way and we like that life. But if you don't, maybe it's not the way for you. So just to kind of summarize, things you need to think about. Are you a small, an SME starting off as a small business owner, or are you building a startup? Startup is underpinned by tech, purely by tech, because you want accelerated growth and you have to be heading towards hitting $1 billion within 5 to 7 years max. Or are you, a small business owner, which means you get to a valuation where your business is worth potentially a couple of 100 million, and that's no small number. That's not a small number to me anyway, and maybe it's not purely underpinned by tech, but that just means you're a small business, and that's completely fine. But what that means is that there's other ways for you to gain access to funding, right? And you don't necessarily have to go down the venture capital route. So I always think that's a good place to start when you're thinking about the business you have or what it is that you are building. Great. Okay. And again, yeah, summarize. So, startups, you build fast, you move fast, you die fast, right? And there's also a 90% failure rate. Again, hyper growth aspirations, we want you to expand internationally. You need to be technology driven or, enabled. And then I guess on the other side, if you're a small business or small to medium enterprise, you're focused on steady growth, you're solving a local or national problem, you're not predominantly technology focused. You can include tech, but your business is not underpinned by tech. Traditionally they are bricks and mortar businesses, but in today's world it sits beyond that. And small businesses are less likely to fail because you are not running at 1,000 miles an hour, right? And typically small businesses have no aspiration to raise money from venture capital funds. So if you're saying, okay, I'm a small business, okay, what are the different stages of business? And, then we'll also touch into, based on the stage of business, what funding options are available to you. So when I think about business and I talk to clients that I'm working with and I also talk to people that are thinking about raising funding, here are the 5 stages. So stage 1 is incubation and development. So this is when you have an idea. So you've got a business idea, you are thinking about how to flesh it out a little bit. You might be in the early stages of building your minimal viable product, which we refer to as MVP, but very, very, very early on. Then the next stage is the startup, the startup SME or small business stage. So you've moved past ideation now. You've thought about how your MVP is going to be structured. And at this stage, now you've built your minimum viable product. You've began to do some testing with your potential customers, and you've developed your product or service to a particular point. And now, it's out there, it's being used, you have customers, you're fixing, you're tweaking, it's actually out there. The next step is, the establishment and growth. So now that you've built it, it's out there, people are paying for it. If it's a business or service that people pay for, or you have customers, you have a community, you have users, and then now you're like, okay, I've proven that it works, right, to a certain extent. Now let's see if it can really hold and stick in the market, if you can achieve product market fit. Can you also demonstrate that you have customers that are either regularly willing to pay for what it is that you have built, or if it's not a paid for service or product, that are regularly engaging, right? So this is when you are at the point where you feel established, you are prominent in your market and space, and you're figuring out how to grow that customer base. So and it does take a little while to get there, to be honest. Just to kind of go back, incubation and development, that can take anything from 6 months to a year up to 3 years, depending on the type of business that you're building. And then, when you look at the next step, which is building out your MVP, depending on what you're building and how much time and resources you have to lend to it, this can also take anything between a year to, 3 years. And then the establish and grow stage, that again, depending on funding, but typically this takes about 2 years to get to that point where you feel like, you've got your customer base, you've worked out a method or formula to make sure you have like consistent customers coming in, and you get to a certain point and you're like, okay, right, I said I was going to start with London, or maybe southeast, the southeastern region, or up north, or wherever you want to focus on. And then you start to think about expansion, because you're saying what I've built now works in the initial geographical region that I wanted to set up my business in. My model works. Now let's think about expansion. Where am I going to expand to? Am I going to go to other cities across the UK? Or if you've managed to secure the UK, am I going to expand to another city outside of the UK or another country? And that's when you start to think about that. But typically expansion is, a bit more later on. And then maturity It's like, okay, I've expanded. I've proven that this works, right? This works. Um, I've been able to expand to a new geographical region. Now my business is mature. What am I going to do now? Am I going to open something else that's similar, or am I going to expand the business in different ways, or am I going to exit? Right. And when I talked about, startup versus, small business on the prior slide, I talked about, for a startup, we want you to get to a $1 billion valuation. Now, that would be maturity for, in startup land. Or, if you were if you're building a small business, or, an SME, maybe for you, that might be an acquisition. So you get to a certain point and you're like, hey, I want to sell my business now. At this point, it's been running for a number of years. This organization seems like it'll be a great fit, and they can buy my business and I can retire, or I can move on to something else, or you form a partnership. So there's many different ways to think about maturity, but that tends to come towards the end. Okay. How do you get your business to be valued at 1 billion? Okay. Right, I'll get to that. That is a great question. Now, a number of different ways, So, I mentioned you build a business and then you think, okay, how am I going to get money? Or how am I going to get my business to the next step? And for, step one is normally, as we all do, we say, okay, hey, I am I have some cash. What can I do with what I have? You may spend a little bit of money to register your company on Companies House. You may pay for a website to be set up, or and bootstrapping is basically when you use the funds that you have, within yourself, to get your business to a certain point before you need investment or need outside funding to then continue to progress. If you do have the merit to, and you do have the capacity to, I say, go as far as you can with what you have without breaking the bank. But remember the without breaking the bank. And I think the reason why I always advise founders to go as far as they can by bootstrapping without breaking the bank, because you would be able to demonstrate, you'll be in a position to demonstrate that you've been able to build something, and you have something to show people when you were illustrating, or selling your business. You're saying, hey, this is what I have, look, I've been able to get to X amount by myself, so therefore, if you give me money, clearly I've shown you how resourceful I am, and I can do more with what you have given me. So bootstrap, it is always the way that any business starts, to be honest. And the amount that you would pump into getting your business to a certain point is very much dependent on your personal circumstance and what you can afford. Please note, don't break the bank. No one should come and die trying to build a business, but at the same time, you should go as far as you can. Now, after that, the next step is to, depending on your need, but I'll just give you a quick overview, then we'll deep dive into the different options. So bootstrapping, angel investors, very high level. That's when you go to individuals who are considered to be high net worth individuals that can write a check in exchange for an equity, and for some equity in your business. So that's, a percentage of shareholding in your business in exchange for some cash. Or you can go down the debt financing route, and this is where you go to the bank or other lenders that will give you some money in exchange for um, interest back. So they'll say, okay, we'll give you £10,000, but you need to pay us back some money every month or at a certain point in time, but this is how much interest will apply to it. There's also the crowdfunding route. Crowdfunding is where you go to these platforms and you ask people out in the public to put some money behind your business. And also, crowdfunding can work depending on what type of business you are building, because it allows you to secure your initial customer base. and your loyal customers, because they're saying before you are even anything, here's some money because we believe in what you are doing. And quite often, depending on which crowdfunding platform you use, it allows you to pre-secure orders. So crowdfunding actually can be a good way for businesses to raise money. And then there's micro loans, which are kind of, it sits along debt financing, but it's where you ask for a smaller amount of money, with a shorter return period, and then you pay it back. You pay it back with a significant amount of time, and then you can, well, within a smaller amount of time, and then you can continue to top it up. So let me just pause and answer some questions. What's the route to get your business valued? Now, there's a very traditional method of valuing your business, and it's normally between 3 to 4 times your balance sheet. Um, but that doesn't really apply in today's world, to be completely honest. The way in which most businesses value themselves is you just do market assessment. You look at the market and you say, imagine I am building, I don't know, I'm making a lipstick, let's just say, a new lipstick, another version of a MAC lipstick. And these are all the things that my business is going to do. Do some market research and see what businesses at a similar stage to yours have set their valuation at. There's a couple of websites that you can use. So, what's it called? Oh gosh, I'm going to drop it in the chat. My mind's just gone blank, but it will come to me. But there's a website, and you can just type in Mac raise in whatever jurisdiction, and it will tell you the valuation, and then you can base it on that. So you would say, hey, a company that built something very similar to mine in the UK or in the US was valued at that. And I'm perhaps a bit more advanced than they were when they raised money, or I'm a bit further behind. So if they set their valuation at maybe, I don't know, £2 million, maybe I'll set my valuation at 1.5 or something. Another way to value your business there's two other ways actually. You should, create your deck, or your investment memo that outlines what it is that you're trying to do, etc. And then speak to some investors. Sometimes it helps to let the market price your business as well. So quite often some founders will say, I am this is the business, I'm raising money, but I'm willing to agree the valuation with my lead investor. And I think that is even a good way to do this, even if you're not looking to raise money from a venture capital fund. You can still have a conversation with some funds or with some angels as well, because they all sit within the venture capital ecosystem, and they will price your business for you. They'll tell you how much they think it's worth. Another rule of thumb, if you want to go down the route of raising equity, either from angel investors or from venture capital funds, for your business, I say when you are early stage, never give any more than 20% away. So when you sit down and you say, okay, I'm making this up for illustrative purposes, I want to raise £200,000, right, for my business. And you're like, I remember that I never give any more than 20% away. So you think about this session and you say, okay, Chenelle, to never give any more than 20%, but I know I need 200,000 when I've done my numbers. Okay, right, 20%, that means my business is valued at £1 million, right? Just very simple maths, because you're saying, okay, or, and that's the maximum that I am willing to give away. As an example, 20% of £1 million is £200,000. So that's the quick maths and how to think about it that way. So there's a few ways you can do it. I think the original way, if you kind of go online, the accountants will tell you it's, sort of 3 to 4% balance sheet. when you are building a business, typically it's not really worth anything at the beginning. So it's really, really hard to use the balance sheet approach. And valuation is not regulated. It's not regulated. It is something that is agreed between you and the investors that are willing to give you money for your business. And then when you think about units and shareholding, that can be worked out much later. And I wouldn't even worry about that. So yeah, I wouldn't worry about that at all, because all that is just a creative way to split a number of shares so you can give everyone that has a shareholding in your business some shares, and that number is often chopped and changed. So I really wouldn't worry too much about that. um and so yes, so that's kind of how you think about valuing your business. But if you are going down the debt route, maybe it might be good to think about how much your business is worth. But when you are securing debt, they care more about your cash flow forecast. How much money are you going to bring in every month to be able to pay this loan back? Or some institutions will give you some debt financing and agree that maybe you pay them at month 6, or it's linked to like an invoice that is due to be paid. So it's really centered around how money flows into your business and when it's flowing into your business versus evaluation. Equity, raising money in exchange for equity, they think more about, what it's going to be worth in the future. So let's just say, as an example, the illustration before, you want to raise 200,000 pounds, right? So I give you 200,000 pounds. I automatically own 20% of your business, right? It's worth 1 million. As you continue and you move through the stages, let's say maybe I give you 200,000 when you are at ideation, building your MVP. Then you maybe in 2 years' time, you get to a valuation where your business is now worth 10 million. Or 3 years' time, you get to a point where your business is worth 10 million. Now, my 20% that I bought for 200,000 pounds is now worth 200,000 pounds. Sorry, 2 million. Sorry, because you've 10xed, and so my investment is now worth a lot more money. And that's the simple maths that investors in the venture capital space, whether you're an angel or whether you are a venture capital investor, that's why we invest, and this is the calculation we're doing in our mind. Versus when you are going for debt, and it's more about, okay, let's talk about when you are going to get money in and when you're going to be able to pay me, and if you have enough cash flow to be able to pay me. Okay. Then, so talked about the different kind of routes. Just summarize. So bootstrapping is yourself, angel investing, individuals that will put money into your business in exchange for some equity, organizations or banks or lending institutions that will give you some money but apply some interest, and it's paid back within a particular period of time. Crowdfunding, you go out, they are some of the early investors into your business, and you can do this via pre-orders, or they give you some cash in exchange for equity. Micro loans, they give you much smaller loans, but the period for which you have to repay this is significantly smaller than you would get with a regular loan. And then there's impact investing, where if you are building an impact focused business, these institutions and individuals care about the impact that you will be making on society, and they use that as a way to assess. And impact investors typically give you a mixture of either equity investment, so they will take some of your shareholding in exchange for some cash, or they'll give you debt, or they may kind of give you some micro loans. And venture capital investing is when you go to a venture capital fund and they will take some equity in exchange for some cash. Okay, so I will touch on this very briefly. So I mentioned crowdfunding, is one of the ways of being, and I've had a couple of companies in my portfolio that are, that have gone down this route. So I'll give you two. One went down the crowdfunding route because she was pre-product but wanted to raise some cash and get her initial set of customers. So she used a crowdfunding platform, Kickstarter to be specific, and she was also a black woman, to get her first set of customers and said, hey, look, I'm building this amazing product. You can pre-order, and so that's how she was able to get the money to go and then fund the build and development of her product, which was amazing, because then once she got the money, she can go and develop and build, and then she could ship the orders out. And she could also demonstrate, hey, I've got customers that are willing to pay for what I'm building before I built it, and I got some money in to fund it, what it was that I'm doing. But these individuals, via Kickstarter, did not invest money in exchange for equity. They pre-ordered. So that's a great way. If you don't want to give away any equity, you want to get your first set of customers. And you also want to kind of build that initial community set. Now, there's another way I would investee company. They went down the crowdfunding platform, and they use Crowdcube. And Crowdcube typically does crowdfunding in exchange for equity. So individuals will go into Crowdcube and they will say, okay, there's a particular business that's raising money. I'm going to put in a small check or a large check, um, and I will get some equity in exchange. And she was able to do it that way because her and her co-founders were willing to give away some equity in exchange for some cash, but allow a funding platform to participate in this business. Now, another, okay, and then in here I've just put a couple of crowdfunding platforms that you can go to and look at depending on what it is that you're trying to do. I mentioned Kickstarter is good because you can use it for pre-orders. Crowdcube's good if you want to raise equity, and there's a few others on here depending on where you are in your business. You can have a look on those crowdfunding platforms and see what it is that is available. I mentioned angel investors, and these are individuals that are considered to be high net worths who self-certify that they are able to, be an angel investor. Apologies, and typically the rule is they say as an angel investor you shouldn't invest more than 10% of your net worth. So, and I think that maybe a talk for another time, but there's a whole thing around democratizing access to investing and how angel investing is a great way to get into this space. And you don't have to be this multi-millionaire to be an angel investor, because I think that's often a barrier for women and people of color. We think, oh, I'm not this super wealthy person, and so therefore I cannot be an angel investor. And there is a way to get in. There's a number of different organizations. Angel Investing School, which is run by Andy Im, is a great way to understand more. I'm happy to have conversations offline about how to get into angel investing. And the reason why I make time to have these conversations, because it's important to have more check writers that look like us supporting us, right? And it's not as scary as you think it is. And the barrier to entry is a lot lower than most think it is. But angel investors are, in essence, two people raising equity funding considered to be angels, because we will typically be your first check into your business. We will ask for some equity in exchange, definitely, but we tend to write smaller checks. Now, I've seen angel investors write checks that are like £1,000 up to a couple of million. It just really depends on your pocket and what you can afford to invest. And quite often, the good thing about angel investors are they tend to be a lot less relaxed than a venture capital fund. And also, angel investors invest in small businesses. So there are two buckets of angel investors from what I have seen, that they invest in um, small businesses because they really just care, and they don't necessarily care that you get to a $1 billion valuation. They know that your business has the ability to kind of go far and make a return on their investment. And there are some angel investors that are aligned with the kind of VC trajectory, growth trajectory, and they want you to get to, that $1 billion valuation as quickly as you can. So whenever you do meet an angel investor, it's really important to ask them what their aspirations or what their expectations of you and your business are right from the offset, to make sure that you're aligned, right? It's really, really important to have that conversation. But yeah, but quite similar to the illustration that I gave you earlier with the 200,000 at a 1 million valuation, this is the same way angel investors will invest. You set your allocation, you go out and you say, hey, how much can you invest? And then you give them a percentage of your shareholding. Then the next group of investors are venture capital funders, right? And there's a number of them. I've put some logos up on here. These are some of the kind of more prominent venture capital funds in the UK. And I think I've spent quite a bit of time talking about the way venture capitalists think and what they look for. But really and truly, it's underpinned by tech. Make the right money moves, ladies and gents. Yeah, it's true. No, it's true. And it is underpinned by tech. But I say this, I feel like I've labored on about kind of how intense it can be, but I don't say that to put you off. I say that to make sure that you're ready. So when you get to that point and you say, yes, I am ready, then you turn up and you have the right conversation. So when you meet a venture capitalist, I'm conscious of time, so I'll try and speed up a little bit. But really and truly, the question that anyone that works for a venture capital fund is thinking: is this individual or business going to get to that $1 billion valuation within 7 years? Are they going to get there? Because it's very, very important for you to get there, because quite often, what founders don't realize is that venture capital funds also have investors that they've also promised returns to. So let's just say a venture capital fund, I don't know, the size of their fund is 10 million. They have promised their investors that at a minimum, they are going to give them back 30 million for the 10 million that has been given to them. And so, in order for them to do that, the only way that they can, make sure they generate those returns is if they invest in hyper growth startups that are aiming towards getting that $1 billion valuation, so that they can return the fund and give the money back to their investors. So I guess when you kind of understand kind of how that works, then you kind of understand why we have this pressure and why we focus so much in chasing the unicorns, because we know that, as I mentioned very early on in the presentation, 90% of startups are going to fail. So of all the investments we make, 90%, even though when we meet the founder and founding team, we're like, yes, okay, these guys are going to be the next unicorn, 90% of that will fail. So it's quite scary, but the 10% that do make it do really well, and they help us venture capitalists to return our fund. And so when you turn up, right, and you meet an investor, you need to make sure that you've thought about how you're going to get to that point. You need to turn up and you need to make sure that you've understood the market. I would do research to understand, um, you know, who has performed well in that space, who has been able to secure money, who's gotten to that, and who's gotten to that point, and then also what they have done to get there, and then more specifically, what are you going to do different? So you monitor what the market has done and you say, what's special about me and what am I going to do different to get that? And then you just need to be completely obsessed with your business. I always say to founders, it's great that you have a business idea, but sometimes some funds get a thousand pitch decks, a month. So you need to make yourself extremely memorable. People will remember what you how you make them feel over over what you say in that meeting. So if you make them feel excited about what you're building and really that they can see and how you are going to get to that point, that $1 billion valuation point, then yes, um, that's what you need to focus on doing. And I think what you should probably also do is spend some time, if you want to go down the startup route, spend some time prepping. There are a number of different organization accelerator programs that you can go to prepare and get ready. But what I would say, and I'm going to wrap up right now, this will be my last sentence, is just make sure you're obsessed. Make sure you've thought about how you're going to get to that $1 billion valuation, and make sure that when you turn up and you're speaking to a venture capital investor, that you are infectious and they feel excited about what it is that you're doing, and they're going to remember and say, "Hey, I remember I spoke to Flavilla and she was phenomenal, and I absolutely need to speak to her, and I need to tell everyone else in my community or in the venture capital ecosystem that she was amazing, and you need to speak to Flavilla." And I know, guys, sorry, towards the end we ran out of time, but as mentioned, if you want to continue the conversation or if you have any other questions, just drop me a note. Just find me on LinkedIn, and my information, will also be on the slides. So do reach out.
What a fantastic session. I've learned so much and in just an hour that I've ever learned. And it's funny how the term startup is so often misused and what startup really means. People assume that because you start a business, you're automatically a startup. You sometimes you're just a small business, and there's nothing wrong with that. And I think you've explained it so well, and also how these valuation are being made and what it really means. I think that everybody enjoyed, and I can see the comment. Thank you so much. I really enjoyed, and I think that we could have talked to you for another 5 hours, but time is running out. And it's only an hour. That was a fantastic masterclass. Thank you so much, Chanel. And again, she's so kind. She's kindly asked that, you can see thank you so much. And she kindly offered to offer some advice, but please be mindful she's a very busy person, so if she doesn't respond quick, you know why. She's fantastic. So everybody, this is the end of the session. This recording will be available within the next 24 hours on our platform. And we thank you again, Chanel. And that's it. It's the end of the masterclass. Thank you.
Thank you so much. Thanks, Flavilla.
Bye bye.